Good morning, traders. This is Barry Wilkie with StartupTrading.com. It is 8 minutes till 9 a.m. Eastern Time on Thursday, September 11th. So, uh, obviously, 24 years ago, not a great day in American history. Um, so, I'm just going to leave it there. So, as we look back at yesterday's session, uh, we we didn't, I said, there's we're opening at the expected high of the day. The catalyst, the real news people are maybe concerned about is coming out this morning. So that was another 24 hours later, right? So as we, you know, open up at what's expected to be the high range of the day for positioning, right, on 0 DTE, and then, the VIX would have to keep one timing framing lower, and the likelihood that that would happen with a major news event the next day was not very high. And we just what did we do? We just kind of uh, slow blood down all day, right? Not a lot. It just barely got back to the settlement. I don't even think we did reach the settlement for the ES, right? And then checked all the way through value for the Nasdaq and just closed, right at the previous day settlement. So let's get into some technicals. So the point of control, remember, we're at all-time highs. A couple points. Who's gonna, 65 quarters all-time high. We are, 10 points from that, 9, 10 points from that right now on the ES. There's, nothing to see here. And if you look at these lows, right, we're basically one time framing higher after this flush that just went back and retested these lows. I will remind you, I mean, you should really put these levels on your chart now. Any retest or breach of these lows uh, that go back, to the highs of really we've been screwing with this area since July 21st, right? It's been support or resistance. You could throw a line right there that was resistance. You come over it. It was support. You broke it. It was resistance. You got back over it. It was support. It's been support, 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 support. Long story short, that's now your dividing line for uh, much further drops. I think if that breaches now, you're easily going down into 61.75. And keep in mind, this is the last full week, right, to trade the September contract. Next week on Monday, we're going to roll uh, to the December contract, right? That's just the way it rolls. Uh, no pun intended there. Just bad speech. So as we, look at where we're at right now, 65.39 is the point of control. That's about 14 points under where we're trading right now, 14, 15, 16 points. As we look at where we are, the NASDAQ has still not gotten up into that all-time. I did mention this yesterday too, that if you looked at where the overnight trading was, right, to be able to get into the overnight or the all-time high for the NQ, you would have to have a very large candle, and by anyone's expectations, that would have been a range expansion candle. Not what you want to see going into an all-time high after basing like we have in just one time frame up. That'd be more like capitulation, uh, and then a re-entry would be a short. Then it would be a great long. So basically yesterday set up perfectly to just keep, slowly grinding up in this channel that we're in, and we'll have to see what happens. So I would expect if we're going to keep floating up towards these higher levels, you're going to see today and tomorrow start holding that one time framing up. So until then, what we have is overnight trading basically went down, tested yesterday's low for the Russell, uh, and that was the one that got the lowest. The rest of them, the Nasdaq just tested value area low. We'll get in more of that on position, why that low is what it is. But just in value, the ES is slightly above value, and the Dow has some signal prints that you can watch, above 623 or below uh, 590 basically is what you're looking at. So positioning wise, the news come out right. We flashed down to 580 on the Qs perfectly, and then responded up. So basically, this news candle that we're in is from 580 to 583. That's about 122 point range for the NQ. That's what you're looking at. So while we're on that, the expected toss high move is right around 586, but there are some pretty good positions all the way up 80 points past that for today. This is just a cluster basically between 580 and 588 with a little bit of split at 580. So one section is 580 to 582, another section is 584 to 588. And then, of course, you know that there's going to be some on the $5 strike just because it's there, right? That 585 level. So as we look at that, you can see that that is around the expected high move of the day, that 86. So as we look over here, that would be basically, right around this 2483 level, 24,083. That's about another 130 points up or three more dollars up. That's what I like to see, right? We've traded $3 overnight, right? I always say you can double either way, what it is, but before you double, you have to just do it once, right? So 586 is your upside target. I would just start taking a lot of it off right before 585 and just trail it up into there, or maybe as you hit 585, uh, on a pullback, you could, potentially add with a nice bracket where you think what you shouldn't trade below on that retracement. And I'm sure Jack will have some sequences that he's watching very closely if we are impulsing up. So the news is out, right? And we have got it. Keep in mind that uh, the we're about if the slowdown is actually going to accelerate, right? We're probably going to smoke up uh, into a top. That top is potentially a multi-year top. Uh, so as we get into it, what I would suggest is uh, right now you might want to look if for those of you that have long-term holdings, you probably want to start taking off uh, 6 to 8% of your portfolio once a month, starting with uh, probably want to take off 3 or 4 of it going into the Fed next week. And then even if it goes up higher than that, if we end up closing out next week on the highs, which I think is doubtful to be honest with you, we'll probably close on the lows of the week next week. You'll have to see when you do it. But anytime that you've making a new high by more than 70 ES handles, uh, just take another 3 or 4% off. Keep doing that, and then if nothing else, uh, every OPEX, right before that, right the day before the VIX expiration would be the ideal way. So the Tuesday before the VIX expiration each month, take 3 to 4% off of your portfolio, and at least wait until you get better price position to start. If you think you were going to swing it and still keep going higher, you can do that. But we'll have to watch the signs of this economic slowdown. But this is probably we're probably starting to put in a multi-year top would be my guess at this point in time. So that's just my 2 cents. It's worth as much as anyone else's 2 cents. Nothing special there. So just take that for what it's worth. So as we look at the positioning on the rest of them, uh, the call wall for the week is still 652, but the longer term call wall, right, is at 650. So we're still above that on the SPY. So the SPYs are still overbought, but for the day we could still get up to 657. So how do you like that? So 657 will be your upper limit, and that's going to be right around where this 656 Uh, 71 is your, expected high of the move. So right around that 657. So anything over 656, you probably want to start, taking stuff off, and you have to see if you can cross over 655 first. But the SPX and the Qs, right? There's lots farther that they can run. So the SPY could end up joining the party, or not. But I would like to see 600 get hit sometime. Remember, when we had this major pullback earlier this year, I could be wrong, but I think we traded for 350 or 450. We'd have to go back and look, but in other words, we've went up, you know, 25 to 37% since those lows early in the year. That's going to be exhaustion when we hit near the 600. There's another reason for that. So, and then the SPY or the SPX, the cash call wall, is going to be at 6,600. So I'd really love to see us get up towards that. And then later on in the month, maybe post OPEX or post FOMC next week, if we can hold above the 65.05 where these short calls are for JPM, it's more than likely that we trade under that by at least 150 points sometime between now and the end of the month. Now we might come back up to it again and close near it or a little bit above it or something, but the odds of staying above this 65.05 from now until the end of the month are, I don't want to say it's zero, but it's probably like 4% or something. It's just probably not going to happen. Uh, but you know, if you like it, there is a chance, but it's a very small chance. So, anyways, uh, 6,500, and then the high of the day for the cash market is up to 65.75. So let's see what the opening prints read. I think that we have a good chance to continue one time framing higher. Watch these expected highs of the days and sequencing. Whoever hits it first, kind of glance at it. Even if you only trade the Nasdaq, watch the ES, the SPX, the SPY, right? Watch if you trade the ES, watch the Nasdaq and the Qs, right? You're doing yourself a disservice if you don't think that one can hold down the other or bring it up. So we got clear lines in the sand for the overnight lows. We'll see what we can press up into for the highs and if we can get some consolidation. I hope this helps. You guys have a great day, and we'll see what Jack's looking at next.